Hello guys, this is ObaFX and welcome to my YouTube channel. Last year, DERIV added some new synthetic indices. And this morning, I'm going to be looking at how to trade two of these new indices that were added. And these are Crash 600 and Crash 900. So I'm going to try to make this video very short. So without wasting much time, let's look at Crash 600, which I already have on my screen. So because this index has not spent much time, we don't have so much data on it. So we're starting our analysis from the weekly time frame as opposed to our normal use of the monthly time frame. Even though all we can see from the monthly time frame is just that we have a sea of green candles and then little buyers in the market, giving us a little idea that we have more sellers already in the market than buyers. So from the weekly time frame, we can see that the market made a high, made a higher low, higher high, higher low, higher high, then made a higher low, a higher high, made a higher low, couldn't push up immediately with this green candle, then came down. So if the market had taken out this major higher low and retested this level, then would have said that there has been a change of trend. So even if there was a change of character here, the market is still in an uptrend. And then, of course, we can see that buyers had come into the market. So in order to see more, let's go to the daily time frame to get more data. So now I think we have more. Now from the daily time frame, if we are just to take this slowly to see if we already have a change of trend here. So if I come back here, I can say that we had a high here, a higher low, higher high, higher low, higher high, higher low, higher high. And then the market came here, broke the structure and entered a downtrend, came back to retest this level with this green candle and then continue downwards to form a lower low, then try to push back upwards with a high, higher high, higher low, ranged a bit, and then broke this structure. However, because we have a very strong support, it came back to this support, formed a W pattern, and then this is where we are at now. Formed the W pattern, came back to retest it, and this is where we're at. So if I'm to take out everything and focus on the most recent information that we have, let me take this out. I'm to focus on the most recent information that we have and shift my chart and say that the market came down, gave us a lower high, tried to form a lower low, ranged here a bit, gave us a lower low finally, then formed a lower high, then a double bottom. Now, a double bottom is usually very, very significant when we're having a reversal in the current downtrend. So double bottom is usually a bullish reversal. It usually signifies that the bulls are coming into the market. So now what do we have? And we say that the rule for trading double bottom is that if we have this and this, this is our double bottom, that normally we expect the market to go upwards, come to this neckline, retest it. If it retests it, it can continue what? Upwards. It can even dabble into this place. So long as it doesn't break the support, then it is still viable. So what we have here now is a typical case of double bottom. So these are our bottoms. And then the market actually broke through, came back to retest. And so now we can say that we are currently in an uptrend because now we have consecutive highs. So how do we now approach trading this particular pair? This is what we'll do. Now we can see that even if I were to impute a trend line here, you can see that the trend line had clearly been broken and retested. So the market is now clearly in an uptrend. So I can bring a new trend line here, which already has what? 2 touches. Now another tool that I can add to my analysis to give me more confidence would be the Fib tool, the Fibonacci retracement tool. So if I'm to put it here, where the market went upwards, so I have my 100% mark here and my 0% mark here. So there's what we call the Fibonacci retracement golden zone, and that's the zone between the 61.0 and the 50% mark. Now, if we look at what I've just drawn, this zone doesn't only coincide with the trend line, probably a third touch of the trend line, it also presents us with a support point. So now we have how many confluences? We have our trend line, which already has 2 touches. We have our Fibonacci retracement zone, which we're hoping that if price comes back into this zone between 50 and 61, then we'll say that we have a very, very strong support, which is also coinciding with a support zone. Now let's see if we can expand this further by looking at the H4 time frame. So as we can see, the market is a bit clearer here now. So this is our support zone that we're expecting the market to come into. So how will I approach this particular market? What will I see before I'll take my trade? So basically, I'll be waiting for, since it's already coming downwards, I'll be waiting for price to get into this zone, probably make a third touch of this trend line and go to maybe the H1 time frame. Go to the H1 time frame. So once price gets into this zone and probably even come down to touch this trend line, and there's a change of trend here, then I can take my trade. So I'll be looking out for buys in this zone. So all I would have to do is to patiently wait for price to come into this place, probably touch this trend line, because of course a lot of people will be waiting here too. So this might act as a liquidity grab zone. So if it touches this trend line and goes, there's a change of trend, so I can impute my counter trend line. Once it breaks and retests, then I take my trade. So that will be that for crash 600 index. So let's quickly look at 900 because I promised to make this video as short as possible. So crash 900, let me take out everything that I have here before. And let's go to the weekly time frame. So from the weekly time frame, we can't really see much because, like I said, the data on these indices are limited because they were just added last year, late last year. This was added December 2024, while crash 600 was added, I think, in August. So let's go to the daily time frame. So from the daily time frame, we have almost the same movement as we saw in the crash 600. Let me take this out. So basically, if we are to look at what the market is doing currently, I can put a trend line here. So we can see that the market came downwards, formed a low, a lower high, lower low, ranged for a while. So the whole of this place gave us lower high, and then it came downwards to form a lower low, then formed a lower high also. So the whole of this place now is giving us like a very strong key point of interest because the market came here severally. So formed a lower high and then finally broke through it to give us like a change of character. Now remember, a change of character simply means that the market is trying to change its current trend. So if we also look closely, we can take this place as a shoulder, head, and a shoulder. So we can say that we have an inverse head and shoulder being formed also. And an inverse head and shoulder is also a bullish reversal pattern. So we can say that the market has actually changed from a downtrend to an uptrend. So just like we did for the first case, I can also impute my Fibonacci retracement tool here. And we can see that our confluence is actually perfect. Now, why do I say it's perfect? Even if the trend line doesn't really go in properly, we can see that it has retested this trend line. But even though it has retested this trend line, it's not fitting in quite well. But we still have a lot of confluences to tell us that the market is going in the upwards direction. So I have this strong support that has just this strong resistance that has been broken, and we're hoping it will turn to support because it has been tested like a bit, but I'm still hoping that the market will come back into this place. Now, why will I say that? We have like an inverse head and shoulder, we have a support, we have a Fibonacci replacement tool, and we call it the support that we have here now is also coinciding with the golden zone of the Fibonacci retracement tool. So how will I approach this particular market? Just like in the first instance, I'll patiently wait for price to come down gradually into the zone. And once it does that, what will I do? I'll go to the H4 time frame. So once I get to the H4 time frame, I will look for a change of trend or a change of trend, or I impute a counter trend line. Once that counter trend line is broken, then I'll take my trade. Now, I know a lot of us will be looking at this area as well, that is support. All well and good, you can take trade from here. But because there's a stronger zone beneath it, I wouldn't advise it because a lot of times this can act as a liquidity grab zone because a lot of people will jump into trades here because you can even see there's a tempting double bottom here. So even if you are to jump in here, or if you had already jump in here, I would say you shouldn't be looking to hold this trade for long because it is likely to come back, break this zone, and come into this place. So if you are taking buys here, it should be for a very short period of time. So these are my ideas of what I think would be happening in these new synthetic indices pair. So please, if you've gained anything from this channel, I'm begging you, please like, share, and subscribe. Thank you very much, and cheers.